Good afternoon, everyone, and welcome to the Fiscal Year 2025 Matching Funds webinar. My name is Annie Kraft, and I'm an Associate Program Manager with the CDFI and Native Initiatives team. I will be presenting today's webinar along with my colleague, Matthew Pickering, another Associate Program Manager on the team. We are joined by several colleagues who are working behind the scenes to put on this webinar, some of whom will be later on for the Q&A portion. This webinar is being recorded and will be posted to our website in the coming days. Next slide, please. Today's webinar focuses exclusively on matching funds. We will not be able to address reasons why your organization was unsuccessful in prior funding rounds, how to enter data into the AMIS application, or anything related to the revised certification application. We will have time for Q&A at the end of the presentation, so please hold your questions until then. We also ask that you refrain from asking questions that are hyper-specific to your organization, as those are better addressed via service requests. We do welcome questions, more general questions on matching funds, though. So with that, let's go ahead and change slides and get started. Matching funds are required for all CDFI program core applicants, except for Native American CDFIs. Applicants must demonstrate that they have in hand and/or committed matching funds totaling at least 50% of its base financial assistance, Persistent Poverty Counties financial assistance, and Disability Funds financial assistance award requests at the time of application submission. If selected to receive an award, recipients that are subject to the matching funds requirement must evidence that 100% of the award matching funds are in hand before a payment is made. And the deadline for demonstrating the 100% of in-hand matching funds is January 31st, 2026. In order to be eligible, matching funds must be received within the matching funds window. The matching funds window for the fiscal year 2025 funding round is January 1st, 2023 to January 15, 2026. Matching funds may be awarded outside of the window, but they must be received in the window. Matching funds received between January 1st, 2023 and the application deadline, which is March 31st, will be considered in hand. Matching funds received after the application deadline of March 21st, but by the end of the matching funds window will be considered committed. The matching funds requirement was permanently waived for Native CDFIs in 2020. So this means that Native CDFIs are not required to evidence matching funds, regardless of which program they're applying under, the CDFI program or the NACA program. Additionally, matching funds are not required for any housing production financial assistance requests, regardless of whether the HPFA request accompanies a base FA request. CEQA FA and HFFI FA applicants are also not required to submit matching funds for their award at the time of application submission, but the CDFI fund does reserve the right to request matching funds from these applicants if the requirement is not waived in the final fiscal year 2025 appropriations. And lastly, matching funds are never required for technical assistance applicants, either in the CDFI program or NACA program. Applicants can use the following types of matching funds. Please note that some types of matching funds are limited to certain institution types. For example, this slide shows the different types, which are grants, in-kind contributions, retained earnings, loans, deposits, equity investments, credit union shares, and secondary capital. And as I said previously, some are limited to certain institution types, such as deposits, which are it's only an eligible source for regulated applicants. If awarded, previous slide, DeAndre. If awarded, the form of award will be in the same type as the matching funds submitted by the applicant. For example, if the applicant provides an eligible grant as matching funds, the CDFI fund will make the award in the form of a grant. If the applicant provides an eligible loan as matching funds, the CDFI fund will make the award in the form of a loan. Applicants can provide one type of matching funds or multiple, and the CDFI fund can award a portion of the funds as a loan and a portion as a grant. Next slide, please. Matching funds must be non-federal. This includes federal sources that are passed through state or local entities. We encourage applicants to refer to Table 9 in the CDFI program NOFA and the matching funds guidance on our website, because both include details on eligible and ineligible sources of matching funds. The CDFI fund will use matching fund sources that result in an award in the form of a grant before counting other sources. So as an example, if an applicant submits a combination of grant sources, loan sources, and retained earnings, we will start with the grant sources and retained earnings because those types result in an award in the form of a grant. And as I said previously, an award can be made in more than one form, depending on the types of matching funds submitted. Matching funds in the form of a loan have some additional requirements that I want to highlight. Loans submitted as matching funds must have a term of 3 years or more. Lines of credit and loan renewals may be considered eligible as matching funds, but I encourage you to please refer to our guidance as we have some more details on exactly what that line of credit or loan renewal needs to look like. Applicants selected to receive an award with eligible loans as matching funds will again receive their award in the form of a loan. The amount of that loan will be dependent based on the amount of matching funds, and the loan award will be in accordance with the CDFI fund's standardized loan terms. The CDFI fund will not permit a recipient to change the form of an award if the form of the award is a loan. Once we verify the in-hand matching funds as a loan, it is not able to change. Next slide, please. This slide shows the terms of the CDFI fund standard loan product. The standard loan product is a fixed interest rate of 4.04%, which is calculated based on the Treasury's 10-year note. The standard loan is a 13-year term with semi-annual interest payments due in years 1 through 10 and fully amortizing payments in years 11 through 13. And this product is also in a senior lending position. Another eligible form of matching funds is retained earnings. Retained earnings that are used as matching funds will result in an award in the form of a grant. If an applicant uses retained earnings as matching funds, it must specify that in the application. The CDFI fund provides a retained earnings calculator that is available on our website and required of all applicants using retained earnings as matching funds. This calculator, on the first tab, you will select the institution type that you are, and then the fields that populate in the calculator are unique to your organization. The retained earnings calculator adjusts an applicant's financial statements or call reports for revenue and expenses derived from federal sources and previously used matching funds. For example, if you received a financial assistance award from the CDFI fund in the past and you use retained earnings as matching funds for that award, depending on the dates of those, they will be entered into your retained earnings calculator. The CDFI fund will review each applicant's retained earnings calculator to ensure that all of the reported figures match the corresponding figures in an applicant's audited financial statements or call reports. If there are any deviations between the audited financial statements and call reports and the calculator, we ask that you explain that in the calculator, and there's a place to do so. Retained earnings that are calculated using unaudited financial statements will be considered a committed source. Retained earnings will only be deemed in hand once confirmed by either audited financial statements or a call report. Retained earnings since inception is an option for regulated applicants only. Retained earnings since inception allows the use of retained earnings over the life of an organization. This option requires an increase in shares and deposits and/or loans and leases in the amount equal to the portion of the award being matched by retained earnings since inception. The CDFI fund will measure the amount of increases based on your institution's quarterly call reports. And again, as mentioned on the previous slide, using retained earnings as matching funds requires completion and submission of the retained earnings calculator. And for retained earnings since inception, the retained earnings calculator must demonstrate your ability to use that option. And a little later in this presentation, we will actually have an example of retained earnings since inception. At this point, I'm going to pass it over to my colleague Matthew to present the next few slides.
Great, thank you, Annie. So any applicant using a loan or a grant, and that includes in-kind contributions as their matching funds, are not required to provide documentation of those sources at the time of application submission. If you're submitting retained earnings, shares, deposits, equity investments, or secondary capital as matching funds, you do have to provide documentation at the time of application submission. And I would note that we're not going to go deep into acceptable forms of documentation for all of these sources today for brevity's sake. However, there is a detailed list of the acceptable forms of documentation for each of these sources in the matching funds guidance posted on our website. Next slide, please. So as Annie noted previously, CDFI program core FA applicants, excluding Native American CDFIs that are applying for base FA, PPC, and DFFA or DFFA, must complete the matching funds section of the FA application in AMIS. The application is set up so that you will be, if you are an applicant that meets these requirements, you will be required to submit that. So the application is set up to just automatically populate that way. If you're submitting matching funds in the form of a grant, in-kind contribution, loans, shares, deposits, equity investments, and secondary capital, the matching funds information will be incorporated into the matching funds detail subsection in the FA application in AMIS. If you're submitting matching funds in the form of retained earnings, there is a separate subsection in the application, and you will go through a couple of different prompts in the application, which will ask you if you're using retained earnings. And if you select yes to using retained earnings, a new subsection will appear that will require you to enter the amount of retained earnings that you are using this year, as well as provide you a place to upload that calculator, the retained earnings calculator that Annie mentioned earlier. The retained earnings calculator is available again on our website and is specific to your organization type. The retained earnings calculator must be submitted in its original format with your organization's financial information filled in the document. So that means we will only accept documents in the form of an Excel document. Please do not save your document as a PDF and upload that We really don't want to have to deem anybody's sources of retained earnings ineligible because they were submitted in the improper format. Please remember, it must be an Excel document. It must have your organization's financial information in it, and it must be submitted in the application. Next slide, please. Again, although documentation of matching funds won't be submitted at the time of application for loans and grants, including in-kind contributions, you must have acceptable documentation of all matching funds used available to you that you will provide to us as if the CDFI fund requests such information. Please refer to the 2025 CDFI program NOFA and the matching funds guidance for acceptable forms of matching funds documentation, as I noted previously. We do reserve the right to audit FY25 FA recipients matching funds documentation to ensure compliance with our eligibility rules. And so that is exactly why you need to make sure that you do have acceptable forms of documentation to support every source of matching funds that you submit in your application. Next slide. So each source of matching funds, except for retained earnings, which is a bit different, require specific pieces of information. The provider name is required for each source. Please note that the provider name cannot be the name of your organization. If you submit a matching fund source with your organization's name under the provider name field, it will be deemed ineligible. So please don't do that. You must enter the status of the matching fund source, meaning whether it's in hand or committed, the form of the matching funds, a contact name. Again, this is a name from the provider, not a contact name from your organization, and then contact information for that person. Contact information can be either a phone number, a mailing address, or an email address. You only need to provide one of those things for each source. You'll also be asked to provide the amount of the source and the date of receipt, as well as choose one of the associated eligible activities associated with your source from a drop-down menu. Next slide, please. In addition to that, every source requires you to attest to certain things. You are always required to attest that the funds you are submitting are non-federal or have lost their federal character. And you must attest that you have appropriate documentation of the matching funds meeting our requirements as detailed in the NOFA that you can provide to us on request. And if the matching funds you're providing are in the form of a loan, you'll also have to attest that the term of the loan is 3 years or greater. Next slide, please. So this is some important information that sometimes gets overlooked or misunderstood. The amount of matching funds that you need to provide at the time of application has no bearing on the final FA award size, as long as you've provided the minimum 50% matching funds. Again, you can submit 100% of your total request as matching funds, 300% of your total request as matching funds, 50% of your total request as matching funds. That does not have any bearing on your final award size or evaluation. The matching funds window purposefully extends beyond the application deadline and the award announcement to give you time to secure additional sources of matching funds once you know the amount of your final award. And in the event that a recipient's unable to provide the full 100% of matching funds for its final award amount, only the portion of the award that's not been matched with eligible sources will be forfeited, not the entire award. And we'll go over an example of what I mean exactly by that in a couple of minutes. Next slide, please. Okay. So please bear with me. The next 3 slides have a lot of information on them. We've got 3 examples here, and our intent with these examples is to illustrate as many different matching fund scenarios as we can. So these are a little dense, apologies for that, but if you have any questions about any of these examples, you can feel free to ask them during the Q&A portion. So hypothetical example number 1 is Pennsylvania CDFI. This group requests a total of $2 million, consisting of $1 million in base FA, $600K in DFFA, and $400K in PPCFA. At the time of application, the organization submits $500,000 in in-hand grants, $100,000 in FYE 2023 retained earnings, $300,000 in FYE 2024 retained earnings, $200,000 in in-hand loans, for a total of $1.1 million. Again, this is 55% of the total award request, and does meet the minimum requirements to have submitted at least 50% of the total award request, subject to matching funds. So the final award for this organization is $800,000, including all base FA, DFFA, and PPCFA. So here's how we would calculate which sources are used and what the form of the award is. We would start by using the $500,000 in in-hand grants, the $100,000 in 2023 retained earnings, and $200,000 of the FY 2024 retained earnings. That means the entire award would be provided in the form of a grant. Again, we'll always provide preference to using the matching fund sources that would result in a grant award first. After that, we would divert to the older sources and not use the newer sources. So in this instance, we've left some of the FY 2024 retained earnings on the table, which in theory, if this organization chose to apply again in a future funding round next year, they may be able to use those remaining FY 2024 retained earnings for the next award, the next application, provided they were still within the matching funds window. Next slide, please. So example 2 is Idaho CDFI. This group is a loan fund. They've also requested $2 million total, which is $1 million in base FA and $1 million in DFFA. This group only submits 50% of their total award request, including $500,000 in committed grants and $500,000 in in-hand loans. This group receives its entire award request, $2 million, including base FA and DFFA. In this instance, because the applicant doesn't yet have 100% of their matching funds in hand demonstrated at the time of application, the CDFI fund will reach out to the applicant post-award to notify them first that $500,000 of their award will be in the form of a loan, and to request additional information on other matching fund sources. We're using the loan at this point because it's been provided as an in-hand source, and it is, we will take in-hand sources before we count committed sources. So a reminder, once you get a notification that a portion of your award is in the form of a loan, you cannot go back and change that source to a grant. Just putting that out there. So once you submit a loan as a matching fund source and it's accepted, that portion of your award in the form of a loan is locked in. This applicant will have until 1/15/2026 to secure additional sources of matching funds if necessary, and have until January 31st to provide evidence that all required matching fund sources are in hand. In this case, in the example, the CDFI confirms that the originally submitted $500,000 grant is now in hand, and also provides an additional source of $800,000 in in-hand contributions in the form of in-kind contributions in the form of pro bono legal services. But this brings them just a bit short of their total award, and they say, we don't have any additional sources to provide. At this point, the CDFI fund would verify all the information submitted post-award by the applicant or the recipient, and we would issue Idaho CDFI a $1.8 million award. And that would consist of a $1.3 million grant, a $500,000 loan, and we would deobligate $200,000 of the originally awarded $2 million. Okay, again, I know that was complicated, but hopefully it made sense. One more example to go through and then we're almost done. All right, next slide, please. Example 3 is Kansas CDFI. This group, important to note, is a bank holding company. So they are a regulated institution, and as a regulated institution, they have the additional option of using retained earnings since inception through their retained earnings matching fund sources. This group requests a total of $1.4 million, including $1 million in base FA and $400,000 in PPCFA. This group has no positive fiscal year end or 3-year average retained earnings. Therefore, if the applicant intends to use retained earnings, they would have to rely on using the retained earnings since inception option. In this case, the applicant would go into the retained earnings section, say yes, they would like to submit retained earnings as a matching fund source. They would fill out the entire retained earnings calculator showing they have no positive fiscal year end or 3-year average retained earnings. And then they would also fill out the bottom of the retained earnings calculator, which is tests 1 and 2 for since inception. If they are able to, with the calculator, are able to demonstrate that they're eligible to use since inception, they would then enter $1.4 million into the matching fund section, or 100% of their award request, and submit the calculator. So in this example, the group gets a final award of $1 million. And since they're regulated using since inception for all matching funds, the CDFI fund will calculate the required increases in shares and deposits and/or loans and leases based on the dates specified in the NOFA and using the applicant's quarterly call reports, which we will obtain directly from the regulator. Kansas CDFI now demonstrates $2 million in increases, which qualifies them to use retained earnings since inception for their entire awards match. And as a result, this group would ultimately receive $1 million in retained earnings since inception, and the applicant would get its full award in the form of a grant. Next slide, please. Again, just a couple of important reminders here, which we've already talked about. Matching funds are only required for non-native organizations applying for core FA under the CDFI program. At the time of application, you're only required to demonstrate in-hand or committed matching funds totaling at least 50% of your total award request. And that includes your base FA, DFFA, and PPCFA requests. You have until January 31st of 2026 to demonstrate all in-hand matching funds totaling 100% of your total award. And again, there are multiple ways to meet matching funds requirements, and applicants can use any combination of matching funds types for which they are eligible. Next slide. And just an important reminder here, we are in the middle of the open application period of the funding round. As of right now, the SF424, EIN, UEI, and AMIS account deadlines have all passed. Just please note now the last day to contact us regarding program or application issues is March 19th at 5 p.m. The last day to contact AMIS IT Help Desk regarding technical problems is March 21st at 5 p.m. And that same day at 11:59 p.m. is the last time to submit your full CDFI or NACA program FA or TA application, as well as your Title VI compliance worksheet. Next slide, please. Now, if you are applying for housing protection financial assistance, you have until April 4th, 2025 at 11:59 p.m. to submit your Excel application via service request. Again, this applies whether you're applying just for HPFA or HPFA in conjunction with a base FA request. You still have to fill out the base FA application and then submit the HPFA worksheet by April 4th. Next slide, please. Here's some contact information for applicants here. Remember, we don't run grants.gov or sam.gov. If you need help with either of those systems, please use the numbers and email addresses here. Any questions for award for AMIS, certification, compliance, or our program, we have addresses here, or the most preferable way of reaching us for any of those issues would be to submit a service request through your organization's account in AMIS. Next slide, please. Again, all application materials are posted on our website. There are two separate pages for CDFI program and NACA program, which we've gone through how to navigate to those places in prior webinars. But all of this stuff is posted on our website, including this slide deck. And so you'd be able to access all of this information by visiting our website and going to the Step 2 Apply page of either the CDFI program or Native Initiatives section of the website. Additional application materials may be added to this website on a rolling basis, so please make sure you keep coming in and checking to see if any new materials have been added or any revisions have been made. And with that, I believe I'm going to hand it over to my colleague, Rio. Next slide, please, DeAndre. So Rio, take it away with the question and answer portion.
Great, thank you, Matthew. We will now open up the floor for questions. Please use the raise hand feature in Zoom, and we will unmute you based on your place in the queue. Note that we will not be monitoring the chat for this Q&A session, so please save your questions until you are called on. If you hear some silence after your question has been asked, don't be alarmed. There are several of us behind the scenes working to find the best answer to your questions. And finally, if for some reason we are unable to answer your question on this call, know that you can always submit a service request to us. With that, we can get to the first hand that's raised. Vanessa, you are open. Here you go.
Can you hear me okay?
Yes, we can.
I just had a question about the retaining earnings calculator. So if we were a CDFI that received FA funds last year, I know the presentation talked about including, and I don't want to misquote. So I guess my question is just about how to complete the retaining earnings calculator if we have received FA funds in a previous year.
Hi, Vanessa. This is Matthew. So there is a place in the retained earnings calculator where you would report that information about your previous FA or TA award. You can find that under, let's see here, income from federal sources, which I'm looking at one tab here for an unregulated CDFI. I'm not sure what organization type you are. But for that, it would be section B.
Okay, got it.
And we do ask, by the way, now that you've brought that up, since you have received CDFI FA funds, it's very helpful for us, and this is written down in the guidance. If you can please break out all of your CDFI fund awards as separate line items, we would greatly appreciate that, because it's hard to go back and triage if you give us one giant lump sum of money to figure out how much of that was from us and other sources, etc.
Okay,
great.
Thank you so much, Matthew.
Thanks.
Thank you, Vanessa. Thank you, Matthew. Next up, Julie.
Hello, can you hear me?
Yes, we can. Hi, Julie.
Hi. How is there a place in AMIS where we can find out what our organization has used for matching funds and previous awards? Like if they use retained earnings or?
Yeah, Julie, this is Annie. Yes, your prior FA awards are in AMIS. There is a matching fund section attached to each award where you can see the type of matching funds, the status being, in hand approved, and the amount. Now, in circumstances where you have more in matching funds than the award, as long as that difference is otherwise eligible, meaning that it's in our matching funds window, and meets our other requirements, that can be used for an award that you're applying for right now. Does that answer your question, Julie?
Yes, thank you.
Yeah, of course.
Thank you, Julie. Thank you, Annie. Next, Kristen.
Hi, can you hear me?
Yes, we can.
Hi, I have two questions. My first question is, if the CDFI is an affiliate of a parent organization, in this case, an LLC, does the award need to be specifically in the name of the CDFI entity? Or if there was an agreement where like the parent could pass it through to the CDFI, would that count?
Hi, Kristen. The applicant must be the recipient. So you can't pass through an award to an affiliate or a subsidiary, with only one exception. Actually, there are two exceptions. One of them is very limited, and that would be a sponsoring entity TA applicant in the NACA program. Or more broadly, if you're a bank holding company, you could pass through the award to a bank subsidiary. But otherwise, the applying entity has to be the organization that spends the money. Does that answer your question?
Sorry. No, I'm sorry. I meant that that the CDFI is the applicant of the CDFI award. I meant the matching funds award. Like, does the CDFI do the matching funds? Could the matching funds be in the name of the parent organization? Or do they have to, does the matching funds have to be the let's say it's a grant agreement, for example, or a loan specifically to the applying CDFI?
Okay, I think I can answer that question. If you go to the matching funds guidance on page 10, there is about a half-page section here on rules for matching funds that are received by affiliates.
Okay.
Hopefully that page 10
10, you said?
Yes, page 10 of the matching funds guidance outlines 5 rules for matching funds received by affiliates.
Okay.
So the affiliate can provide funds from a third party or directly from the affiliate to the applicant to be used as matching funds. I won't go through every single point, but
Yeah.
yes, the affiliate can provide funds to you, either from themselves or a third party, to be used as matching funds. But just see that section to make sure that whatever you're talking about meets all of those criteria.
Okay. And then my second question, thank you, that was very helpful, is do the matching funds have to be, and I'm sorry if this is a dumb question, unspent, or can they be funds that have been committed or like, you know, are you looking for unspent matching funds, or like, yes, I guess that's just my question. Or can they be
Sure.
they could be like grants that have already been used, let's say.
Great question. And the answer is yes, they can be spent or unspent. The key thing to note is that they have to have been received by your organization within the matching funds window, regardless of whether they've been expended or not. So, you could have received an award or received a grant a year ago, spent it all, but you received it within the matching funds window. It's still eligible to use as a match.
Okay, terrific. Thank you for that. Very helpful. Appreciate it.
Sure. Yep.
Thanks for your questions, Kristen. Next up is Cleopatra Luis. And you might be on mute, Cleopatra. We're still not hearing you. Have you tried unmuting? Okay. We're going to come back to you, and we're going to move to a question from Charter School Finance and Development.
I have a question about example 2 about Idaho. Can you please explain a little bit more about this 800 additional in-kind contribution they received in form of pro bono legal services? Is that something that they will be receiving as a service in the future that has not been billed yet?
So that's a good question. If I understand you correctly, I would say it's a similar answer to the last question, which is that the in-kind contribution, in this case, the pro bono legal services, would have to have been donated within the matching funds window.
You mean actual cash needs to donate it, or actual work will be
Sure.
done during that time?
Work. So in this case, I believe there's additional information on in-kind sources in both the NOFA and the guidance. The rate for the in-kind sources has to meet certain criteria, et cetera. You can't charge like exorbitantly high. You can't say that you got something valued at an exorbitantly high rate when it was, you can't say you got legal services at $1 million an hour. I don't really know. That's just a wild example, but that is the gist of it. So your organization has received donated services during the matching funds window. You may use the value of those donated services as a qualifying source of matching funds.
Got it. And another
There's
question.
sorry, really quickly, just to give you some place to look to, page 7 of our guidance has much more detail on in-kind contributions.
Page 7. Okay. Can I ask another little bit dumb question, I guess, about how can the CDFIs as a retained earning can be used? It can be only stayed on your as a just increase your net assets, or would that be any kind of restricted funds or not?
So I would direct you to the retained earnings calculator. Are you at unregulated loan fund?
Yes.
Okay, I thought so. So for that, when you complete the retained earnings calculator, you can see pretty clearly kind of the inputs of the calculation. So the calculator starts with your total income and revenue. It backs out income from federal sources, matching funds used in prior funding rounds. So there's like a series of inputs that, eventually will show you what you have in available retained earnings for the purposes of our program.
Okay.
Does that answer your question?
I think my more question is how can we use, once we have that retained earning grant from CDFI, can we just use it, would that be restricted or not? Can we use for anything else, or it has to stay as a retained earning as part of our net assets?
I think there might be some confusion here between money that you're getting from an outside source versus the CDFI funds sort of definition of what retained earnings means. So just as Annie described, you should take a look at the retained earnings calculator and see how we define and calculate retained earnings for your organization, because it's different from anything you might have received from an outside source. Is that helping to clarify?
Thank you. I'll look it up. Thanks.
Thank you for your question. We are going to go back to Cleopatra and see if we can hear from her.
Okay, can y'all hear me now?
Yes, we can.
Perfect. I have a question. I'm working with an organization that recently sold a building, and that would technically not be considered retained earnings. It's actually capital gains. How would they reflect that in their matching funds?
That's a good question, and I believe donated land. So are you referring to like donated property?
No, their organization owned their building, their office building, and they just sold it.
Okay, I think that what we would recommend in that situation is that your total income that you report in the retained earnings calculator would have to be a match for the income that's listed in your organization's audited financial statements. So that would, it would vary, you need to follow the way that money was recorded by your auditor.
Okay. So if it's reported as capital gains, is there an option for that? It doesn't seem like there's an option for that in the matching funds options.
I think I think for that specific question, we'd recommend that you submit a service request. That's a bit of a particular situation that is not very common. So I think it would probably be best, we would give you a better answer if you just submit a service request on that one.
Okay, thank you.
Yep.
Thanks for your question. Next, I hope I pronounced this right. It's either Becky Lynn or Beck. We'll see. You are up though.
Hello, yep, it's Becky. Becky
Cool.
Lynn, sorry. Yeah, so what are acceptable forms of documentation for matching funds if we are chosen to provide that documentation? Can you hear me?
Yes, we can hear you. Sorry for that pause. So the answer to that is it's going to vary by the type of matching funds. I believe we have an appendix in our matching fund guidance that details specifically all the various acceptable pieces of documentation for each source. Again, like my answer, because we have so many different types of sources, I don't want to go through the whole list, but
I do think just for like grant funds, like, are you looking for like a signed grant agreement or some type of something in the ledger that shows that funds came in through?
yeah, 1 second, I can reference the guidance. Just give me a second here. If any of my team members know off the top of their head, please feel free to jump in while I'm looking.
I got it while you were talking, Annie. It's Appendix A in the matching funds guidance. Appendix A is titled Acceptable Forms of Matching Funds Documentation. For grants, it depends, if it's a capital grant, you provide signed copies of the grant transmittal letters, grant agreements, grant commitment letters, or official emails. Proof of payment, which includes a copy of a check, bank statement, wire transfer, or a letter from the grantor. If it's a notes receivable, it would be valuation methodology of the portfolio being transferred, legal agreements and documentation, proof of assignment of promissory notes, list of assigned promissory notes, etc. Does that help?
Perfect, thank you.
Yep.
Thanks for your question, Becky. All right, next up, we have a hand raised from a phone number. I'm gonna unmute you. If you could please provide your name and then ask a question. You're still on mute. Okay, we'll give you a minute to try and unmute. Are there any other questions that folks have that they'd like to ask before we conclude the call today? George, we see your hand.
Hear me?
We can
Hello?
hear you.
You can hear me? Yes. So I have two questions regarding to matching funds through grants. So the first question is, as an organization, I can include grant in if this grant awarded, whether the organization receives the fund or not, because some grants is reimbursement grant, so we can do some expenditure and then we request the money to send the fund to us. This is the first one. The second question for the conditional grant, we need to meet some criteria in order to recognize revenue. What if I have a conditional grant and I including in the application, and after a while, as an organization, we didn't meet this criteria and we send this fund back to the funder?
So I'm not Annie, I'm not sure if you have an answer for the first question.
I think I might. I can give it I can try, and George, you can let me know if it helps. I believe you asked for your first question about being awarded funds versus receiving the funds, if that's correct.
Yes.
Our requirement for matching funds in the form of a grant is that your organization has to receive those funds in the matching funds window. So if your organization applied for and was awarded a grant and got some sort of letter telling you that prior to the matching funds window, but actually those funds were received by your organization in your organization's account during our window, that's what we're looking for. We're looking for when you received those funds. Does that answer your question?
Yes, so we're talking now about the cash basis. So I will have to make sure that we receive the cash, the fund from the funder in order to include in the matching application.
Yes.
Okay.
And if
So
you
for-
receive, and to add on to that, if you received a portion, if you have a grant that's larger than the portion you received, you can use the portion that you received within the matching funds window.
I got you. For the conditional grants, if we receive a fund, I mean, and after that, I include this in the application, but after a while, we didn't meet the criteria and we send this money back to the funder. So what is this scenario gonna affect us?
That's a great question. I don't know personally the answer to that one. I am going to recommend, George, that you submit a service request for that question. Again, that's a little bit uncommon of a situation, but we will look into it and give you an answer.
Thank you so much.
Yeah, thank you.
Thanks for your questions, George. Next, we have Arisa Koyama.
Hello. So we're looking at using the retained earnings calculator for our application, and some of our line items, won't be tying exactly to our audited statements, especially income and certain expenses related with lines B and C. And I'm just wondering, in the notes section, it says notes/documentation. Is there any expectation to include like a link to another Excel file or Word document, or is it mostly just narrative explanation?
No, that's a great question. No, in the example that you just gave, what we'd be looking for is a narrative in that column to explain that difference. So if something was excluded or included, just the narrative there. We don't need additional Excel worksheets or anything like that.
Great, thank you.
Thanks for your question. We are going to return to the person with the hand raised whose display name is the phone number. You were up.
I'm so sorry. I'm so sorry about that. I'm logged in through my phone, and it was just last minute that I came across the webinar link. So I was like, I had a question I wanted to just throw in. So I apologize for the phone number name. My name is Nicholas Israel Eladen. So just put a name to the phone number, please. So, well, my question is, I've been just following the entire process of what it's like to be part of either any of the programs that you're doing. I think my question is just kind of, out the box, because I'm trying to see if I can connect with someone within the department that can help me through some questions I may have in terms of just how your program works as a new nonprofit coming into the scene of things, and if there's a contact, if there's a way we can schedule a meeting and, you can walk with me through that steps.
Yeah, that's a great question. My recommendation to you, and I'll let any of my colleagues add on to this, is we have a lot of information on our website. So I first would encourage you to introduce yourself to our programs via our website, and then any specific questions about particular program elements can be asked via service request. Any
Okay.
of my colleagues though could add on to that.
Well,
Yeah. Do you have another question?
Well, I'll say, for the first step, I think, just because I'm thinking about the certification, but I think I don't know how soon that would, like, once someone applied to be certified, I don't know how soon that request would be granted. But I came across the the healthy food program that you have, and I've just been trying to find within the area that I'm in Georgia to see, who is involved in that program. And I've looked through the list of companies that has been certified, but I didn't see anything around that program. So that would be my first interest before thinking about certification. I just wanted to see, if there's any information on that or who I can speak to.
Yeah, but both are great questions. They are beyond the scope of this particular call, though. We want to stick to it. No, totally fine. We understand that everyone has different questions. We do want to stick to matching funds for this call, but I do encourage you again. Our website has more information on those topics, and we welcome you to submit service requests for those particular topics.
Okay, sounds good. Thank you.
Thank you for your questions. All right. Are there any other questions from our attendees today? We are not seeing any other hands raised. Going once. Going twice. All right. Thank you for attending this presentation and sticking through with us to the end. We are now going to conclude. Please note that if you still have any other questions, or if you have some that come to you after the call, know that you can always submit a service request to us. To those who are applying, we look forward to reading your applications and wish you a great weekend. Bye-bye.